Welcome back. We're at the low point for our indices. The Nifty Bank is down over 500 points right now. More than just the Fed, I think, some commentary coming in from Russia has also added a wee bit of volatility to our market, maybe some sort of nervousness in sentiment, and that's reflective in the kind of moves that we're seeing in the Russian index itself. The Russian index opened with a cut of almost 8.5 odd percent, and currently as we speak, the MOEX is down by almost 5.5, 6 odd percent, and that's caused a bit of flutter in our markets as well. Global markets are seeing a wee bit of risk on as we speak. Good time to get in Sacchitanand Uttekar for a quick check on the technicals of the market. Sacchitanand, we've so far managed to hold the 20-day moving average despite the declines that we're seeing from the top. Even after the decline that we saw on Friday, Monday, Tuesday, we recovered. What are your thoughts on where we go from here, given the increased volatility in global sentiment?
Good afternoon, Mangalam. Mangalam, I think if you specifically look at today's trading session, it looks more on because of the unwinding pressure that we have seen so far. If you look at the levels, I think the 17,680 is a very significant level as the 20-day moving exponential moving average is placed there. But if you look at the data set, it is clearly exhibiting that Nifty should be range bound. 17,800 looks like a resistance as of now. But on the lower side, we don't see it slipping below 17,600. So probably the idea is to continue on the short side on the market as of now, keeping a stop loss somewhere close to 17,740 on the higher side, and probably during the day we may see another swing towards 17,600. I think that will be a good level to re-enter into the market from a long perspective. When we look at Bank Nifty, the put call ratio has come down to 0.7. But despite of that, there is still some room on the lower side. So I think the reward to risk opportunity in Bank Nifty is far more better than Nifty. We are expecting that this particular swing could continue towards 40,600 on the lower side. The stop loss should be placed at 41,160 on the higher side, and fresh shorts can be deployed in Bank Nifty as of now. But Nifty, I think the reward to risk is not that prominent.
Okay, I wanted to ask you about the Adani Group stocks. After many days, we're seeing a massive slide in these names, of 5 to 6% lower now. Adani Ports is down about 5%. Any thoughts on how to approach it from a trading perspective?
Well, good afternoon, Sonia. If I look at Adani Enterprises itself, I don't think, since last June 2022, we have seen the stock sustaining below its 5-day exponential moving average. And today is the first time when we are seeing that particular, phenomena getting established. So probably one should, book some profits here. If you look at, both the monthly as well as the daily scale, the RSI is clearly in an overbought zone, an extreme overbought zone. So probably some profit booking is evident. So I would refrain from building any fresh long positions when it comes to Adani Enterprises per se. Probably a good level could be around 3460, 3450, where its 20-day exponential moving average is placed. So as of now, I think it's better to avoid any fresh trades on either side of this particular counter.
Would you have any support levels for cement stocks? ACC, for instance, is now down, 7%. After having seen a bit of a rally, it's turned negative for the week. We have India Cements, which is down 6%, along with Ambuja as well, which had seen a big rally right now, down a lot, almost 6.5 odd percent. A view on these stocks, along with the stocks that you've lined up for us today?
Mangalam, I think cement stocks are clearly in a very strong bull trend, and probably if you look at ACC per se, it has moved back towards its 20-day exponential moving average. So I think that will be a good support. Somewhere close to 2,500 would be a good idea, good level to get into this particular counter. We are not seeing any major distortion of the trend, so it's a good healthy trend wherein buy on decline should be adhered. The stop loss should be placed at around 2420 on a closing basis, and probably we may see it again swinging back towards 2700. As far as trades are concerned, I think it's better to keep a long short ratio here. Clearly the FMCG pack has been buzzing, and here HUL has broken out from a declining wedge formation, which is a very strong indication of a reversal. We are expecting this particular momentum to continue towards 2680. So we still believe that this particular counter should be accumulated on a decline. The stop loss should be placed at 2595 for HUL, and long position should be built here. On the other hand, Tata Motors is one particular counter which has been a relative weakest counter when we look at autos. So if you look at the data set here, clearly it has been failing to sustain above its 200-day exponential moving average. On the 60-minute scale, there's a clear-cut bearish pennant formation indicating a price target close to 405. So probably fresh shorts can be deployed here on Tata Motors with a stop loss at 435.
Okay, thanks a lot, Sacchitanand. Have a great day. That's the word coming in from Tradebulls. Let's slip into a quick break. Before we do that, here's some great news for investors. You can now track US market action real time on Money Control. Log on to the Money Control website or the app and stay informed about all that matters in global markets.